Mr. Warren Buffett is one of the greatest investors the world has ever seen. I admire him a lot. The way he invests in undervalued companies, looks for strong business moats, and focus on businesses with a bright future. His discipline, patience, and wisdom are qualities every investor can learn from. But there is one area where I personally don't follow his philosophy, and that is the idea of concentrated portfolio. Buffett believes in putting a large part of your money into a few great businesses and then watching them very closely. That worked for him, and I respect it. But it's not the right approach for me. My strategy is different. I run a fully diversified portfolio. At any point, I make sure I hold at least 25 companies and I never put more than 5% of my capital into any single stock. I have been managing my portfolio for the last 3 years and my approach is long term. I only sell when the stock gets very expensive or if I need some cash. And I always keep about 5 to 10% in cash for flexibility. In the US, my portfolio includes companies like Amazon, Google Alphabet, Oracle, Nvidia, Lyft, Uber, Portillo's, Kava, First Watch Restaurant Group, On Holding, Duolingo, Hims and Health, Zeta, Liquidity Services, Lululemon, Celsius, and Alpha Metallurgical Resources. Outside the US, I hold Novo Nordisk from Denmark, Constellation Software from Canada, Mercado Libre from Latin America, and JD.com and Pinduoduo from China. Here in New Zealand, I invested in Ryman Healthcare, Aroa Biosurgery, Kiwi Property Group, and IKE GPS Group. And to broaden my exposure even further, I also hold ETFs such as iShare Russell 2000 ETF, iShare US Financial ETF, iShare US Healthcare ETF, iShare MCSI Brazil ETF, iShare MCSI Brazil Small Cap ETF, and iShare MCI India ETF. These investments covers technology, transport, healthcare, dining, property, retail, fintech, and the global markets, giving me a wide spread across industries and geographies. Over the last 3 years, this strategy has worked very well for me. I have consistently beaten the S&P 500 with an annualized return of more than 25% per year. That is the power of diversification, patience, and discipline. For me, diversification isn't about chasing quick wins. It's about building long-term stability and peace of mind. So while I'll truly admire Warren Buffett's concentrated style, my own philosophy is about diversification and risk management. And that is what helps me stay invested with confidence for the long run. If you enjoyed this video, don't forget to subscribe to my channel, which is Peaceful Investor, and also follow me on Instagram, Facebook, and TikTok. Links are in the description. On this channel, you will learn not just about stock investing, but also about discipline, financial freedom, and investing with a calm mindset. And remember, this content is only for educational purpose only and not a financial advice. Hope you enjoyed today's video. I will see you in the next one. Thank you.